Hi students, welcome to Sunil's tutorial. I'm Sunil Malwani and today we'll be doing this chapter called as amalgamation. We're going to do question number 8 in the books of Bunty and Kuber. Right? Calculation of PC. Let's start with calculation of PC, guys. Now, they've given you that BK Limited was formed to take over Bunty and Kuber Limited. The balance sheet on the date of the amalgamation is as follows. BK Limited was to issue 10,000 equity shares of 10 each to the public at a premium of 10%. Bunty and Kuber were taken over by BK Limited on the following terms. Right? Now, let's see this calculation of PC. Assets taken over. Bunty, Kuber. Okay. First, let's see for Bunty. In the case of Bunty, they have given you that equity shareholders are to be issued 7 shares of 10 each in BK Limited and are to be paid 5 in cash for surrender of each 6 shares. Preference shareholders are to be paid 10% premium by 12.5% preference shares in BK Limited. All assets and liabilities are to be valued at book value except machinery, which is valued at 10% below the book value, and debtors at 1,60,000. So all assets and liabilities. Let's see this. Goodwill, building, machinery, furniture, investments, debtors, stock, cash, and other current assets. Now, they are saying that all assets and liabilities are to be valued at book value except machinery, which is valued at 10% below book value. That means building is going to be 1,50,000. Machinery is going to be 10% below the book value. Machinery is 80,000, so 72,000. Furniture is going to be 10,000. Debtors is going to be, investments is 1,40,000. Debtors is going to be 1,65,000. Stock is going to be 75,000. Other current assets is going to be 20,000. Cash in bank is 13,000. And other current assets is going to be 20,000. Fine. Let's see this. Now, they said that liquidation expenses 12,500 are to be borne by BK Limited. Discharge of debentures by Bunty Limited at a discount of 10%. Issue of 13% debentures of BK Limited. Let's see the liabilities that are taken over. In terms of liabilities, what are the current liabilities that you have? You have 9% debentures. Then you have sundry creditors. Then you have other liabilities. Right? Debentures are 1 lakh. Creditors are 60,000. And other liabilities are 40,000. Right? So these are your liabilities that have been taken over. Right? Now, okay. Now let's see the calculation of PC. The actual calculation of PC for Bunty Limited, working out 2. Calculation of PC of Bunty Limited is given in terms of liability. Let's see the first adjustment. Equity shareholders are to be issued for equity shareholders, right? they are saying that equity shareholders are to be issued 7 equity shares of 10 each in BK Limited, and also to be paid 5 in cash for surrender of 6 shares, right? They are going to be given old, new. They are to be given 7 equity shares of 10 each in BK Limited, and they are to be paid cash 5 for every 6 shares in their old company in Bunty Limited. For every 6 shares in Bunty Limited, they are to be given 7 shares in BK Limited, and they are to be given 5 rupees in cash. Now, how many shares are they holding? If you look at Bunty Limited, they are holding 24,000 shares. Their share capital is 2,40,000 of 10 each. That means they are holding 24,000 shares. Someone please calculate and tell me how much is this?
28,000.
Excuse me?
28,000.
28,000. And this 30,000?
Yeah, 20,000.
20,000. Right? See, the first adjustment, they are saying that they are to be issued 7 equity shares at rupees 10 each, and are to be paid rupees 5 in cash for every 6 shares held in, for every 6 shares held. So they are going to be given 28,000 equity shares of BK Limited, right, at the rate of 10. So that is 2,80,000, plus they are going to be given cash. They are going to be paid 20,000 cash. Fine. Besides that, they are saying that preference shareholders are to be paid at a premium of 10% by 12.5% preference shares of BK Limited. 12.5% preference shares of BK Limited. Right? Now let's see, this preference share capital is 1,50,000. If I pay at 10% premium, that will become 1,65,000. Right? Do we get this thing here? It was 1,50,000. They have to be paid at 10% premium. So this is 3 and 1, 4,65,000. So that's going to be my PC of Bunty Limited. Right? Now let's see for Kuber. Besides that, there's also that 12,400, which is the liquidation expenses, which are to be borne. Your liquidation expenses borne by BK, okay, and that was all going to be in the books of BK. Bunty is not bearing anything. Let's see for Kuber. They are saying that cash of 3,000 is to be retained for liquidation expenses, right? Cash of 3,000 is to be retained for liquidation expenses. You have a cash of 8,000. That means the cash that is going to be transferred is going to be 5,000. Out of 8,000, you are keeping 3,000 with you. You are Kuber, you are keeping 3,000 with you, and balance cash you are transferring. Debtors and investments are to be valued at 90% of cost. Debtors is 60,000. That means they are going to be valued at 10% less. That means that is going to be 54,000. Debtors and investments. Investments are 80,000, 10% less, so 72,000. Debtors and investments are to be valued at 90% of the cost. Machinery and stock is to be valued at 10% above cost. Machinery 60. Debtors and investments. Debtors and investments. Investments were 80,000, so that's 72,000. Next, they are saying that machinery and stock are to be valued at 10% above cost. So machinery 60,000, 10% above 66,000, and stock is 90,000, 10% above is going to be 99,000. Right? Other assets and liabilities are to be valued at book value except fictitious assets. Right? Other assets are to be valued at book value. So building will be 1,40,000. Furniture is going to be 5,000. Other current assets is going to be 10,000. 9% debentures is going to be 1 lakh. Creditors is 40,000. And other liabilities is 24,000. Fine, do we get this thing clear? Now, someone please, and they've given you goodwill is also there, 25,000. Someone please add this. If you add the entire assets, you will get that total as 25,000 plus 140 plus 66 plus 5 plus 72 plus 54 plus 5 plus 99 plus 10,000 should give you 4,76,000.
And this side is 6,45,000.
I'll come to that. This is how much? This addition?
Yeah, 6,45,000.
6,45,000. And from 4,76,000, when I subtract 1,64,000, I'll get 3,12,000. So this is going to be my PC of Kuber. Fine. Now let's start with the sum. This was your working note. Now let's start with the sum. Let's first do journal entries in the books of Bunty. You will have standard entries. Standard entries in the sense, first entry will always be realization account debit to all the assets. Now all the assets you will be taking from the balance sheet. So realization account debit to building, to machinery, to furniture, to investments, to debtors, to stock, to cash, to other current assets, right? You have to write all balance sheet values. So this is going to be 1,50,000. Machinery is 80,000. Furniture is 10,000. Investments is 1,40,000. Debtors is 1,65,000. Stock is 75,000. Cash is 13,000. Other current assets is 20,000. Someone please help me add this 6,53,000. This addition is 6,53,000 being assets taken over. Right? First entry is always assets taken over. Second, you have to take over liabilities. So you want to ask me something? Right? Second entry. I don't need it now. When I need it, I'll tell you when I need it. Right? Now, let's move on to liabilities. In that case, you have 9% debentures account debit. Debentures account debit. Sundry creditors account debit. Other liabilities account debit. To realization, right? 9% debentures is 1 lakh. Creditors is 60,000. And other liabilities is 40,000. So in that case, this is going to be 2 lakhs. Being liabilities taken over. Next, after that,
10 lakh.
1 lakh. Right? Okay. Next, once you have this, the next thing that you need to do is you need to transfer the preference shares to preference shareholders. So in that case, you transfer preference shares. So this is going to be 11% debit. You're going to transfer the preference shares to preference shareholders. So 11% preference share capital account debit. Leave a line to preference shareholders. Right? So in that case, 11% preference share capital is 1,50,000. Bunty Limited, how much am I going to pay to the preference shareholders? I'm going to be paying them 1,65,000. How do I know that? Look at this. Preference shares of BK Limited to be paid to preference shareholders is 1,65,000. The difference is to be written as realization. Realization account debit 15,000 being preference shares transferred. Right? Next, let's transfer equity shares. Right? The next thing I have to do is I have to transfer equity shares. So this is going to be equity share capital account debit. Equity share capital account debit. Next, you have general reserve account debit. Then you have profit and loss account debit. Then you have, that's it. Those are only reserves to equity shareholders. To preliminary expenses. Right? Equity share capital is given to you as 2,40,000. General reserves are given to you as 45,000. P&L is given to you as 30,000. Preliminary expenses are given to you as 12,000. 2,40,000, 285. 285. Someone please get me this.
3,03,000. 3,03,000.
3,03,000 being equity shares transferred. Right? Next, once you have transferred the equity shares, then you need to record the PC. Record the PC. The new company is BK Limited. BK Limited account debit to realization. Right? PC was 4,65,000. Being PC recorded. Right? Next, receive the PC. Receive the PC. Debit what comes in. What all is going to come in? Equity shares of BK Limited. Debit 12% preference shares of BK Limited. Debit cash debit to BK Limited. Remember all this they had paid you when we are doing PC. They had paid you equity shares, cash and 12% preference shares. That same thing I'm writing here. So this is going to be 2,80,000. Then you have 20. This cash is 20,000, and 12% preference shares is 1,65,000. So this is 4,65,000 being PC received. Right? Once you have received the PC, start payment. First you will pay the preference shareholders. Let us pay the preference shareholders. Debit the receiver. Preference shareholders account debit. Preference shareholders account debit to, they are going to be paid 12% preference shares of BK Limited How much are they going to be paid? They are going to be paid 1,65,000. That's the number of shares that you receive. The preference shareholders paid. Right? Once you have paid the preference shareholders, you need to make realization. Guys, someone please start adding on the calci. 6,53,000 minus 2 lakhs plus 15,000 minus 4,65,000 is going to give you how much? 3,000. You're getting a difference of 3,000 on the, you're getting positive or negative difference? Positive difference. Yeah, so the difference is going to be on the credit side. So in that case, you will have equity shareholders account debit. To realization. Equity shareholders account debit to realization 3,000. This is the loss that is being transferred to transferred to equity shareholders. Right? Once you have transferred the loss, then you have to finally pay the equity shareholders. Debit the receiver, equity shareholders account debit. What all have they got to be paid? They have to be paid equity shares of BK Limited, and they have to be paid cash. Right? Equity shareholders are equity shares of BK Limited are 2,80,000. Cash is 20,000. So this is going to be 3 lakhs being equity shareholders paid. Right? So that finishes the journal in the books of Bunty. Now, you have to make journal in the books of Kuber. In the books of Kuber. Same method again, same standard 9 journal entries. First thing, you have to transfer assets. So this is going to be realization account debit to all the assets. In this you also have goodwill. So this will be 2 goodwill, 2 machine, 2 building, 2 machinery, 2 furniture, 2 investments, 2 debtors, 2 stock, 2 cash, 2 other current assets. All the values from the balance sheet. So this is going to be 25,000, 1,40,000. Then this is 60,000. Furniture is 5,000. Investments is 80,000. Debtors is 60,000. Stock is 90,000. Cash is 8,000 and 10,000. Right? So this is going to be 4,75,000. No, 4,78,000. Someone just cross check that, please. Someone please cross check that. The assets transferred. Next, the next thing that you need to do is transfer realization. Guys, the entries remain the same, only the figures are going to change. So you have 9% debentures account debit, sundry creditors account debit, other liabilities debit,
to realization.
Right? 9% debentures are 1 lakh. Next you have creditors is 40,000.
This is 24,000. This is 1,64,000. Being liabilities taken over.
Right? Next, the next thing that you have is you have to transfer the preference shares to the preference shareholders. 1 lakh. This is 11%
Preference share capital account debit to
preference shareholders. Right? Again, here in the case of Kuber also they have said that the preference shareholders are to be paid at 10% premium by 12.5% preference shares, and the balance is to be discharged. So they are being paid at 10% premium.
so to preference share holders.
Preference share capital is given to you as 1 lakh. Right? 10% premium, that means they will be paid 1,10,000.
The difference is going to be realization. Realization account debit 10,000 being preference shares transferred.
Right? Once you transfer the preference shares, next you have to transfer equity shares.
So this is going to be equity share capital account debit.
Equity share capital account debit,
General reserve account debit. P&L account debit to equity shareholders.
to preliminary expenses.
To preliminary expenses.
Right? Equity share capital is given to you as
1,60,000. General reserve is given to you as 40,000. P&L is given to you as 21,000. Preliminary expenses are given to you as 7,000. So this is 2,14,000. Being equity shares transferred.
Right? Next, record the PC.
BK Limited account debit to realization. We had found out that the PC is 3,12,000. 3,12,000. Fine. Being PC recorded. Once you have recorded the PC, then you receive the PC.
They have said that preference shareholders are to be paid at 10% premium by 12.5% preference shares in BK Limited issued at par, and the balance of purchase consideration is payable in equity shares at par. So they are going to give you 12.5% preference shares of BK Limited. Right? Besides that, they are also going to give you equity shares. Equity shares of BK Limited to BK Limited. Right? They are going to give you preference shares at 10% premium. That means they are going to give you preference shares of 1,10,000. Your total PC is 3,12,000.
That means 2,02,000 worth equity shares they are going to give you. Fine, do we get this thing clear? Mean PC received. Once you have received the PC, pay the preference shareholders. Preference shareholders account debit to 12.5% preference shares of BK Limited, right, which is going to be 1,10,000. Being preference shareholders paid. Once you have paid the preference shareholders, next you need to make realization account. Guys, let's see this. Someone please start adding. 4,78,000 minus 1,64,000 plus 10,000 minus 3,12,000. How much does that come to?
12,000.
12,000 loss. So that will be equity shareholders account debit to realization. Amount is 12,000. Being loss transferred. Right? Once you have transferred the loss, then you have to pay the equity shareholders. So debit the receiver. Equity shareholders account debit to equity shares of BK Limited. Right? Equity shares were 2,02,000. Being equity shareholders paid. Right? Now, once you finish making journal entries in the books of Kuwait Limited, the next thing that you have to do is make journal entries in the books of. Then the next thing that you have to do is make journal entries in the books of BK Limited. Right? Let's see this. I'll rub this out, guys. The next thing that we need to do is you need to make journal entries in the books of BK Limited. In the books of BK Limited. Right? Let's see this. How do we do journal entries in the books of BK Limited? Now, you will have both the entries we will do simultaneously. So this is going to be equal to business purchase, debit what comes in. You're going to be taking over both the books. That's you're going to take over Bunty as well as Kuwait. So in which case you have business purchase account debit to liquidators of Bunty Limited to liquidators of Kuwait Limited. Right? Now, liquidators. Right? Now, out of this liquidators of Bunty we had found out was 4,65,000. Liquidators of Kuwait was 3,12,000. Someone please tell me how much is this? 777. 7 lakhs. Being business acquired. Next, once you've acquired the business, you have to take over its assets and liabilities. So this is going to be let's see this goodwill account debit, building account debit, machinery account debit, furniture account debit, investments account debit, debtors account debit, stock debit, cash in bank debit, other current assets debit, leave a line to 9% debentures of Bunty, to 9% debentures of Kuber, to creditors, to other liabilities, to business purchase. Now how do I get these figures? You add them and get the figures, right? Now first we come to goodwill a little later. This is 150 plus 140, so this is going to be 290. Next, 72 plus 66, 138. Right? Then 1 lakh plus, no, this is 10,000 plus 5,000, so that's 15,000. Then you have investments 140, 210, 212, 2,12,000. Then you have debtors 165 plus 54, 210, 219. Someone cross check please. Stock 174. Cash in bank 18,000. Then other current assets 20 and 10, 30,000. 9% debentures of Bunty. Now they have stated something about this. They said that discharge of debentures of Bunty is at a 10% discount by the issue of 13% debentures. By the issue of 13% debentures of rupees 100 each of BK Limited. So the debentures are going to be discharged with the help of debentures of BK Limited, right? So in that case, you are going to have this at 10% discount. They are going to be taken over at 10% discount. So if they are being taken over, this is going to be debentures is 90. This is 90,000. 90,000 here again. Creditors is 60 plus 40, 1 lakh. Other liabilities 40, 64,000. Business purchase is 3 lakh 12 plus 4 lakh 65,000. Someone please do that. Someone please do that. 7 lakh 77,000. Check whether the total debit is equal to the total credit. Right? Check if the total debit is equal to total credit. Check how much is the difference, guys. Someone please check the difference and tell me our goodwill is 25,000 here. On the debit side, you have goodwill also 25,000. Someone please check and tell me how much is the difference. Both the sides are same. So this is being assets and liabilities taken over. Right? Now, let's see this. Let's pay. Right? So this is going to be liquidators of Bunty Limited debit, liquidators of Kuber Limited debit. To what all are you giving them? You are giving them equity shares. To equity share capital. To you are giving them preference shares. What preference shares are you giving them? You are giving Bunty and Kuber preference shares. You are giving them 12.5% preference shares. And you are also giving them cash. Right? Liquidators of Bunty are 4,65,000. Liquidators of Kuber are 3,12,000. Right? Now they are saying that equity shares 2,80,000 is being given to Bunty, and to Kuber you have given them equity shares of 2,02,000. So this is going to be 4,82,000. Right? Preference shares 1,65,000 to Bunty and 1,10,000 to Kuber. So that's going to be 2,75,000, and cash is 20,000. Right? Being PC paid. Right? Now, once you finish paying the PC, the next thing that you have to do is, once you finish paying the PC, the next thing that you have to do is convert the debentures. So you are going to be issuing which debentures? You are issuing your own 13% debentures, right? So debit what comes in? 9% debentures of Bunty, debit 9% debentures of Kuber, debit to 13% debentures to 13% debentures account. Now there is some, okay, 13% debentures. This is going to be 90,000. This is 90,000. So this is going to be 1,80,000. Right? Being debentures exchanged. Right? Is there anything else that has been done? Liquidation expenses of 12,500 are borne by BK Limited. So BK Limited is going to pay that also. He is going to pay liquidation expenses. Money is going out. So this is going to be goodwill account debit.
So not liquidation expenses.
No, liquidation when paid by the purchaser, it's called as goodwill. Right? To bank amount is 12,500.
So where did you get this amount?
It's given in the sum. Liquidation expenses of 12,500 are borne by BK Limited. The liquidation expense paid. Right? Done. So we finish paying liquidation expenses. Now the last thing that we need to do is make balance sheet. Let's see this. Balance sheet. Liabilities, rupees, assets, rupees.
authorized share capital. Right? Amongst authorized share capital, they are saying that okay, there's this entry right at the beginning. Continue. BK Limited issued 10,000 equity shares for rupees 10 each to public at a premium of 10%. So besides this, besides selling shares to Bunty and Kuwait, they have also sold shares to public, right? So we have another entry there. They have issued 10,000 equity shares to public. Issued, money is coming in. Issued to equity share capital. They have issued at a premium to security premium. Right? Equity share capital. They have issued 10,000 shares of 10 each. 10,000 shares of 10 each. That means 1 lakh. They have issued it at a premium of 10%. So 10,000. This is 1 lakh 10,000 being shares issued. Right? Done. Okay. Let's start. Authorized share capital is not given to you. Issued and subscribed capital. Issued and subscribed capital. In issued and subscribed capital, first of all, you would have equity share capital. Equity share capital. How much would equity share capital be? Equity share capital is 4,82,000 here plus another 1 lakh you have issued. You have to make the balance sheet from this journal of BK Limited. So 4,82,000 plus 1 lakh. So 5,82,000. In that next you will also be having 12.5% preference share capital. Preference shares. Right? 12.5% preference share capital is going to be 2,75,000. Right? That's it. Then you have reserves and surplus. Right? In reserves and surplus, you just got a security premium of 10,000. Secured loans. Secured loans, you have issued 13% debentures of 1,80,000. Then you have unsecured loans. Not given to you. Then you have current liabilities. Amongst current liabilities, you have creditors. Creditors is 1 lakh. Creditors is 1 lakh. Then you have other liabilities of 64,000. Right? That's it. So those are the two current liabilities that you have. Now let's move on to the asset side. Fixed assets. In fixed assets, first you have is goodwill. You had a goodwill of 25,000, out of which you have another 12,500 on the debit side, right? You have another 12,500 on the debit side, so 25, 35, 37,500. Then you have building, which is 2,90,000. Then you have machinery, which is 1,38,000. Furniture, 15,000. Right? That's it. Then you have investments.
Investments are 2,12,000. Current assets. Under current assets, your debtors. Debtors are 2,19,000. Stock 1,74,000. Cash you had 18,000, out of which you have given 20,000, so negative 2,000, and then you also given 12,400, so negative 14,400, and you got cash of 1,10,000. Someone please add, subtract that and give me that answer. That's 18,000 minus 20,000 minus 12,400 plus 1,10,000. How much? 95,500. Right, then you have other current assets. Other current assets is going to be 1,80,000. No, other current assets is not 1,80,000, is 30,000. Other current assets is 30,000. Right? So we have recorded all the entries. Let's try tallying the balance sheet, please.
121100. Right? This finishes the sum. We'll stop this here for the day. Thank you very much.